quick whiteboard video, something we usually don't talk about, but we're going to talk about today. A little Forex action. We do also offer Forex signals and teaching, so again, why not talk a little Forex today? Slowed in the market in the equity side, so again, we're just going to take some time today to talk about Forex. So again, I want to talk about here, fundamentals. I know everyone knows if you're a Forex trader, and we deal with a lot of them, and they're all great, but again, a lot of them don't understand kind of the intricacies of macroeconomics and fundamentals. In regards to Forex, they just see charts. And again, charting is great. I'm all for technical analysis, but you also need to be a well-rounded trader. In order to do that, you need to understand fundamentals. So we're going to go over a couple of pairs. I'm just going to stick to the G8s, none of the exotic pairs. We talk about this in our teaching course on Udemy and GARcapitaltraining.com. So again, I'm going to talk fundamentals here. So let's go ahead and talk about the main pairs. So this is how it usually goes. So again, your main pairs, you know what they are. Dollar yen, you have euro dollar, you have pound dollar, Aussie dollar, dollar Canadian dollar, what do you call it? Kiwi dollar, hello. And then of course you have dollar Swiss franc. Again, these are the G8. The G8. I know there's not 8, but I'm saying about out of the 8 countries, the largest economies on the planet, these are the ones you want to trade. A lot of people have asked me about the Chinese yuan. They don't allow Forex on Chinese yuan, by the way, FYI, so you can't really trade it. But again, these are the ones you want to take a look at. So I'm going to go each one and kind of exactly talk about the fundamental thing you want to look at when it comes to it. So again, what can you look at? What are we looking for in order for these kind of moves? So again, I'm going to start with dollar yen. Dollar yen is your, I would say your universal, and also euro dollar, is your universal, I guess, risk on trade. Again, if you're looking at it to go up, we're looking at it to be a risk on play. So when markets are doing well, the stock market, you can take a look at dollar yen and euro dollar. And what we have is called a correlation, which is actually when the stock market tends to go up, equity markets here, the dollar yen tends to go up with it. Because the yen tends to be a risk off pair. So I'm going to write it right here. Dollar yen, do you want to zoom in, make a little bit? Japanese yen, risk off. So we're going to leave that there for now. Did I spell risk off correct? There you go. So again, dollar yen is your risk on play. So again, if you're buying the dollar, US dollar yen, you're going to the upside expecting that the market is going to create that correlation with this pair. So again, if like for example, things you want to look for, you want to look for the Dow to be above, well, 100 to, plus points. I would say 200 points to be safe. Then you can see dollar yen and euro dollar to rise up. Usually, again, this is not gospel, this is just usually how it goes. So again, if you start to see futures in the morning, you're seeing ES up about a good amount, about 20 handles and 25 handles plus. Again, you're going to get US dollar, Japanese yen to go up, so is euro dollar. Again, these are what we call risk on trades. Remember we talked about risk off? These are risk on. Again, only if you go long these pairs. So again, let's kind of put those away here as the correlation with a stock market going up. So again, I'm going to write here, you want to get this, Nick, stock markets correlation. Right there. That's how you want to do it. So now we're going to move on to pound dollar. Pound dollar, again, there's one thing when it comes to the pound. GPP, do you get this, Nick? Volatility. Now, usually when it comes to the pound, you're going to get very, very sharp moves. You're going to get 100 to 200 pip moves intraday. Again, now, can you handle that? That's really up to you. You want to go lower position size, lower lot size when it comes to pound, especially if you're trading it. Again, risk management is key. What do we always say, Nick? 1 to 4%, right? Nothing has changed. 1 to 4% risk management always. So let me go ahead and set this up. Risk management. So again, pound dollar, the things you want to look for here, forget the stock market. Pound dollar is based on one really thing right now. It's just Brexit. Until further notice, until Brexit is handled and done with, you want to take a look at the pound dollar. If you're starting to see some votes coming on, well, also BOE, which is the central bank for the Brits, you want to take a look at Brexit and BOE. So Brexit headlines are very key. If you want to know what the Brexit headlines are, I really, really suggest following Forex Live on Twitter. Take a look at Daily FX on Twitter, and you can also take a look at Live Squawk. We usually retweet most of the pound headlines with regards to Forex. If you are interested, take a look at our Twitter page at GAR Capital. It is open, it's free, it's public. Take a look at that. You can actually see some of the headlines we take a look at. You can also follow all the names that we do too as well. Use it at your convenience. So again, these are the things you want to look for. BOE, Bank of England, and Brexit headlines. Next one here is Aussie dollar. So Aussie dollar, I'm going to go ahead and move that towards the stock market correlation as well. So again, this is a risk on. Oh, one more thing. Risk on is here too. Risk on the pound. So again, so far, 4 have been risk on. We're going to get to risk off here in a bit. So risk on trades, Aussie as well, Aussie dollar. So again, what do you want to look for Aussie dollar? I want to take a look at China and gold. The largest export in Australia is gold and gold miners. So again, if you want to trade, for example, gold, you getting this thing right here? Gold, for example, GLD, which is on stocks, you can trade the Aussie to the upside if you're bullish. And just as inverse, if you're short gold, for example, you want to go ahead and short the Aussie dollar. These are the correlations. So again, any kind of China headlines, negative or positive, tends to move the Aussie. So again, you want to go ahead and play this based on Chinese headlines. Again, Live Squawk, all these Twitter handles, they're going to help you. Gold, if you get a bullish rise in gold, guess what's going to go up with it? The Aussie dollar. So again, these are the correlations you're going to get with Aussie dollar, China, and gold. That risk on as well. Next one. I can't say dollar, Canadian dollar is a risk on. I would say kind of neutral. So let's go ahead and put a neutral rating here. And the main thing dollar, Canadian dollar usually tests is one thing alone. It's oil. So when oil is strong, you want to short dollar, Canadian dollar, because the largest export for the Canadians is oil. So if oil is strong, you want to go ahead and short dollar, Canadian dollar. If oil is weak, what are you going to do? You're going to go ahead and buy dollar, Canadian dollar. When it comes to oil, the two things you want to look at, oil movements, number one, you want to see inventories, which is every Wednesday at 10:30 a.m. And then the next thing is the dollar, USD or $DXY on your brokerage, on your platform. So again, when we get oil inventory, now again it gets kind of screwy. If we get great inventory, meaning that there's less inventory out there, the price is going to go up, but that's not usually the case. But that's something you want to take a look at. So again, oil is very important when it comes to dollar, Canadian dollar. If oil is strong, again, if we're up 2% on oil, 2%, 3%, example, you want to short the dollar, Canadian dollar. Remember, oil or crude is priced in US dollars. So what does that mean, guys? If the dollar falls, what's going to go up? Oil and crude. If oil's falling, usually it's because the dollar's gaining, right? You're with me, right, so far? Next thing, you can do this analogy with gold. If gold is up, usually it's because the dollar's down. If the dollar's up, guess what's going to go down? Gold. So again, we get back to US dollar and dollar, Canadian dollar. So again, you want to take a look at oil if you're trading dollar, Canadian dollar. Next one is the Kiwi dollar. This is another risk-on trade. When stock markets tend to go strong, just like these 3 or these 4, you want to go ahead and go long the Kiwi. There's a lot of news that comes out for the Kiwi. The next one is the bank, was it the RBNZ? Royal Bank, the central bank for New Zealand. They're the ones that provide the rates and rate cuts or what have you. They have a pretty stable economy. So again, they usually come out with their news every month around 4:30 p.m. Eastern Standard Time. Sometimes a little earlier, 3:30. So again, you want to keep a look at Kiwi dollar. I can't say I trade them a lot, but again, keep an eye on them. So that's one you really want to keep an eye on if risk on markets are up. Again, if the Dow's up 200, S&P futures are up 25 handles, again, you're going to see these kind of movements. Usually, stock markets, dollars down, stocks up. Usually, now we're in a weird place where the dollar's up and stocks are up. So again, it's not gospel, but again, it's a good hint to get you where you want to go. So again, if the stock market's up, you want to take a look at these pairs. 1, 2, 3, 4, and 5. The next one, dollar franc. There's one thing I want to add here in the risk off, because we haven't got there yet, is CHF. the Swiss franc, they are risk off as well. When things are going very bad or in a recessionary environment or meltdown or what have you, these are the two you really want to be long in against any crazy pairs, or any crazy pairs, any risk on pairs. For example, Kiwi franc, you probably pay a little more spread. Guess what's going to go down? Kiwi franc in a recessionary environment or a very lower stock market environment. Same thing with the Aussie yen, Aussie franc. You can short that with the market because now you know the fundamental side of the actual balanced, I guess you want to say the balanced level of risk on and risk off. So again, the key here is to always play. I want you to write this down. Nick, I want you to come a little closer. Play strength versus weakness. Always. So what does that mean, Carlos? What does that mean? Every day you're trading Forex, I want you to look at in the morning, look at all the pairs, and I want you to rank them 1 through 5. What is the strongest currency in the market? Sometimes it's yen. Let's say, for example, the yen is the strongest, but the dollar is the weakest. What are you going to do today? You're going to short dollar yen. And right there you have your pair set. If you play strength versus weak, barring any kind of news, barring any kind of central bank, barring kind of economic data, this is the easiest way to trade, to do it. You want to take a look at the strength versus weakness, play the strength against the weakness. So this JPY is the strongest and the dollar is the weakest. For example, you want to short dollar yen. Back to where we're coming from, dollar franc. So USD is kind of in the middle of it. It's the world's reserve currency. We know this. Everyone accepts dollars. So this pair right here is another risk on, if to the upside. So again, if markets are good, like we said, the Dow 200, whatever, you want to go ahead and get back to going long dollar franc, right? It's fair enough. So we know that, speaking here, dollar franc is a risk on play. If markets are go down, what are we going to do? We're going to short it. We would go long Swiss franc, right? And you can use this pair against any one of these risk on plays. Pound, euro, dollar, Aussie, Kiwi. We said the CAD is neutral. The CAD, I want you to think of oil when it comes to the Canadian dollar. I want you to think of gold in China when it comes to the Aussie, BOE and Brexit when it comes to pound dollar, euro and the yen here, dollar yen, euro dollar, risk on trades. Risk on, risk on, risk on as well. So you can actually be both ways and use it as a risk off trade to the downside. So you can actually short dollar franc if markets are going down. That'll be your best bet against a euro franc. I'd rather you trade this to the short side if the markets were going down. But number one, usually when it comes to markets going down, I want you to short dollar yen. That's your key. So again, so we know our risk off here is yen and franc. So when things are going down, you want to get into these pairs. But the main thing, guys, every morning, I want you to do this, is very key. Strength versus weakness every single morning. You wake up as a Forex trader, I want you to take a look at the strength and weakness. Go 1 through 5, rank them in, whatever they are. Play the weakest with the strongest. And guess what? Remember, yen is always the secondary pair. Everything's always secondary when it comes to yen. Yen is never first. So again, if the yen is the strongest and the dollar is the weakest or the euro is the weakest, what are you going to do? You're going to short. You're going to short. So again, dollar yen, for example, if you're long, you're buying dollars against the yen. Inverse that, if you want to short it, again, you're being bullish on the yen. So again, always strength versus weakness, rank them 1 through 5, and then go by strength versus weakness. You can go wrong. Now again, that's barring any kind of economic data. But again, this is just, they're going to help you understand what to look for when it comes to Forex fundamentals. Hope this helps, guys. Remember, take a look at this. Make sure you get all this. Oil, inventory at 1030. Again, we know what oil, dollar Canadian dollar. Risk on, dollar yen, euro dollar, pound dollar, Aussie dollar, dollar franc. And of course, Kiwi dollar, dollar Canadian dollar is neutral. This is your oil, gold in China, RBNZ, pound dollar. When it comes to BOE and Brexit, euro dollar is all risk on, dollar yen's risk on, and your risk off pairs right here, yen and Swiss franc. I'm going to say it one more time. Every day, you need to be going strength versus weakness. 1 through 5, and that's how you play, fundamentally, how you play Forex with fundamentals. Hope this helps, guys. Have a great rest of your day. We'll catch you guys next time.